Hello, everyone, and welcome to an all new episode of OIC's Wide World of Options. I'm your host, Mark Benzaquen, and today we're going to be looking at the Iron Condor as our strategy du jour. And to help us make sense of condors, I'm very happy to welcome Luis Silva, the beauty and brains behind Sigma Options. Luis, welcome to the show. Thanks for joining me today.
Hi, Mark. Thanks for having me. So excited to be part of it.
Yeah, thank you. Listen, I know you're pressed for time. You and I had spoken just a moment ago. You're heading to Peru to do some options education there. So let's get right to it and get you on that plane. So as you're pressed for time, let's go ahead and start with the construction of an iron condor. I know people look at it different ways, selling a call spread, selling a put spread, selling a short strangle, buying a long strangle. How do you look at iron condors? And so let's start with that. When you're doing your education, how do you structure that?
All right. Well, basically, an iron condor is a neutral position, and I've been taught that we should usually set iron condors when we expect that the underlying asset moves within certain range, right? But we can position iron condors, long or short iron condors, depending on what is my vision or expectation of the market move or the underlying movement. So I can even build iron condors on like a directional basis. So if I want to take advantage of the upside, I can build iron condors in a different way. So I love to play with iron condors and also iron butterflies, but definitely the most used like way to get iron condors is when you are expecting like a range bound. Neutral is a
Right.
neutral option strategy built from four legs. So you sell an out of the money call, you buy a further out of the money call, and then you sell an out of the money put, and you buy further and out of the money put. So basically, an iron condor is like a short strangles, but we have the wings that protects us from unexpected movement.
hmm And those strikes that you select, as you had mentioned, you're selling an iron, you're selling it out of the money call, buying a further out of the money call, et cetera. Those long options that you're buying, those are for protection, right? And the short, I kind of look at it as the short is where the range in which I expect the stock to stay. But just in case I'm wrong, because I'm not always right, I've got those longer options, those wings, as we call them, for protection. So when you're setting an iron condor, when you're choosing these strikes, how do you go about that? How do you choose that? Where do you want the protection and where do you want the body to be?
All right. So I basically use like three type of approaches when it comes to select the underlying to place my iron condors. So basically, I have my watch list, which I build based on fundamentals, and then I try to refine my entry just by looking at the chart. But I know that some people only play with these strategies looking at the implied volatility. I like to be like more specific. So when, let's say, my best way to play with iron condors is to select the shorts between like a range. If I see channels or upward channels or downward channels, I try to put my shorts between the support and resistance levels. So I expect that the underlying asset moves between the support and resistance level. So, and I try to benefit from the time decay. So basically, I try, sometimes I go by deltas and try to select uh, 15 deltas uh, uh, in each short. So that will give me approximately like 1/5 of the credit or of the maximum risk that I'm taking. So let's say if I go with an iron condor with $10 Y, so I expect to collect around 200 and 250. So yeah, sometimes like I said, I go by deltas. I always look at the implied volatility, but I try to also like incorporate the technical analysis in
hmm
my making decision. Yeah.
Okay. You had mentioned implied volatility. Let's go ahead and stick with that for a little bit because we know that it's such a crucial component when it comes to option pricing. The fact that an iron condor has four different legs, too long, too short, working, against each other in some instances. What what do you talk to your clients about when it comes to implied volatility and Vega exposure with an iron condor? Is it something to be concerned about?
Of course, implied volatility is the most critical variable within the when it comes to options. So from the mathematical perspective, iron condors are short in Vega. So what does it mean? When the implied volatility rises, options premium like expand, and which increases the value of the short strikes, which is bad for the position when the volatility is increasing. But when you sell your short, when you sell your iron condors, when the volatility is high and the implied volatility falls, the premium contracts just gets reduced, which benefit the iron condors as the short options decay much faster, right? So there are life cycle principles. Vega is the most sensitive at initiation. And as expiration approaches, theta dominates and Vega exposure declines. So when a trader wants to play with this type of strategies, they must understand that iron condors thrive in stable volatility environments. So entering them when the implied volatility is relatively high, but expected to mean revert, it can improve the odds that that position is gonna be successful. So also there is a risk consideration, because if there is a sudden volatility spike, let's say earnings, um, macroeconomic reports, it can expand the options values. So if they can hurt the iron condor even if the price hasn't moved much. So it's definitely critical to consider what is the opinion of the implied volatility, if we can expect um, some if the expands, or on the opposite, if the volatility contracts.
Yeah. And that makes sense. And I completely agree. As prices are going to be moving around all over the place, or volatility is going to be moving around. It's certainly going to be crucial to understand how that is going to impact this trade, this spread with the four different legs. Because I usually, when I educate about options, I talk about comparing, for example, a single leg spread to a more multi-leg or complex, kind of the difference between a bicycle and a motorcycle. If something's wrong with the bicycle, you've got a flat tire, the chain fell off. Motorcycle, there's all these different moving parts, so it's harder to figure out what's going on. So when it comes to position management, now that you've got all these moving parts, what is something that you look at in terms of either rolling the position to increase profits that you might have, or maybe closing some out if one side gets tested?
So it depends. So how far the expiration is. For instance, I play a lot of 0 DTE and 1 DTE
Okay.
positions. So basically, I have like in a stop. If let's say if I'm try to take $250 credit in an SPX Iron Condor that is $10 wide. So if I lose, let's say $50, $60, I just close the position. I don't try to roll out, and no,
Hmm.
just I just close the position, because I try to use as much as I can the the Black and Scholes model. So I go by probability. So if I have a 70% chance or 65% chance, I just go by the probability. So I try to stay very focused on how much I'm taking as a loss and how much I'm taking as a profit. So because in the long run, if the spec movement or the spec value of all my positions combined, so I stay within certain range of losses and certain range of profit, is gonna work. But if I have, let's say, iron condors, 30 days to expiration or 45 days to expiration, I try to manage them as much as I can. I prefer to deal with the puts rather than the calls, because for some reason, well, I try to select just this amount of stocks that I'm playing all the time with. If the case, something happened, something really bad happened, I don't know, we have an earnings call or something that the company drops 10%, 15%. I just try to roll as much as I could, but otherwise I will close the long put, roll the position just as naked put. I leave it as a naked put. I take the profit from the call side and just try to roll and roll and roll. If I get a sign, well, I just keep the stocks and start doing cover calls.
Interesting. Okay. Luis, let me ask you, I know you've got a plane to catch, so I don't want to keep you from that. But I am curious about something. I know that you do primarily your educating to the Hispanic community worldwide. We have a lot of Hispanic viewers on of our content in our webinars, et cetera. Can you tell me a little bit about how you got involved with that kind of population niche, if you will?
All right. I became an options trader back in 2011, so by mistake, because I was like trading futures at the time and I was looking for some information, and one of these YouTube videos pop up. So it was a tasty trade video. At that time they were called tasty trade. So I started learning about options by myself. I'm just sewing a bunch of YouTube videos. And 4 years later, so I was like trading options all the time. I just left the the futures behind, and I just only concentrated on stock and options. I even trade forex like 20 years ago or 25 years ago. It was a really difficult, really tough market, and also futures. So I found that options were a better fit for me. So one friend of mine asked me to teach him about options. And I said, okay, I have this YouTube channel. I'm gonna upload the video because at that time was really hard to transfer, like very heavy videos. So I just uploaded to YouTube, just to show my friend, hey, you place a cover call, this and that, and this is the way you open the position. I just was telling a friend how to do a cover call.
Right.
And guess what? So a couple other people started like watching the video, started asking questions, and said, okay, I posted another video. And then I posted another video. So fast track 2025. So this YouTube channel that I have it just to watch YouTube videos, is it became a large community because I found that when I tried to learn about options, my only choice was to learn them in English. There was no
Right.
choice to learn them in Spanish.
Yeah.
So I was trying to look at the content in Spanish. I didn't find anything at all, anything at all. So what I started doing was translating content from Option Alpha, from Tasty, put it into the Spanish language. But then I started like creating my own content later. So right now it's a huge community. We have over 400,000 subscribers right now from every single country in the earth
Wow. It's
that is Spanish
wonderful.
speaking. Yeah,
Yeah.
it's not too far from for what we see right now here in US, for instance, is we're trying to give as much education as we can, talking about Greeks, talking about different strategies, talking about the fundamentals of options. So because there is options have gained so much popularity, but I feel that sometimes they are treated like casino chips, and they are not. They're more than that. So that's why
Right.
we have
100%. Yeah.
yeah, we have strived to teach, to let the Spanish community, the Spanish speaking community, that there is a world of options that they need to know, and there are so many possibilities. So they are super engaged, and it's probably the fastest growing market right now when it comes to investment. So we have 23, 22, 23 countries that speak Spanish. So I've seen that it's an underserved market. So that's why
Yeah.
we have filled them with a ton of content.
Well, that's excellent. Thank you. I do know that we often have a Spanish-speaking audience that reaches out to us asking us for our content in Spanish, and unfortunately, it's not something that we offer at this time. hopefully it will be something in the future, because I completely agree with you. It's a largely untapped market. And it's a huge community worldwide and underserved. So yeah, very excited. Hopefully we'll be able to serve them directly. I love the fact that that you and Option Sigma exists to reach out to these people directly. So absolutely wonderful. And again, like I said, I know that you've got to get to the airport, so I want to thank you for joining us today. Ladies and gentlemen that are joining us on this episode of Wide World of Options, thank you for your support. Luis Silva, Option Sigma, thanks to all of our listeners out there. For those that are interested in our webinar program, please visit our OIC website, optionseducation.org. And for any options related questions that you have, reach out to us, options@theocc.com. Luis, again, thank you so much for your time. Go catch that plane. Have a wonderful trip in Peru. And thanks for joining us today. I really appreciate it.
Thank you, Mark. Thank you for having me again.
All right, everyone. Thanks so much. Thanks for tuning in. And we'll be talking with you again very soon. Take care, all.